Right. Welcome to another deep dive.
Looking forward to this one.
We've got some really interesting excerpts here from R. Nelson Nash's Becoming Your Own Banker.
Classic.
Yeah, and we're going to be talking about how dividend-paying whole life insurance can be used to create, basically, your own banking system. And it's going to challenge some conventional financial wisdom, I think.
Definitely.
Get ready for some aha moments. So, Nash really starts off strong with this idea of imagination being so powerful right off the bat. And he uses that story about Carl Gauss, this kid who's just this math prodigy.
Oh, yeah.
And the story goes, his teacher, to keep the class busy, asks them to add up all the numbers from 1 to 1,000.
Right. Keep him busy for a while.
Yeah, exactly.
Yeah.
But little Gauss figures it out instantly. 500,500, like that. Because he sees the pattern.
There's a better way.
Yeah, there's a smarter way to do it.
More elegant.
Yeah. And Nash is saying this is the kind of thinking we need to apply to our finances. We get stuck in these ruts. And we just assume things have to be a certain way.
That's the way it is.
Yeah, so it's like, what if there's a better solution out there? We're just not seeing it.
Right.
Then he goes into this interesting analogy with a grocery store. Imagine you own a grocery store.
Okay.
You're stocking the shelves, dealing with the customers, the whole 9 yards.
Yeah.
But then every night, you sneak out the back with bags of groceries and never pay.
Oh, okay.
What happens?
You go bankrupt pretty quick.
You go bankrupt.
Yeah.
You can't just keep taking from your own business.
Exactly. And that's what he's saying a lot of us do to our own finances.
Oh, okay.
We steal from ourselves.
We're our own worst enemy.
Yeah, by undervaluing our own ability to actually, manage money and build wealth.
Right. And instead, we rely on these external systems.
Yeah, the banks, the credit cards.
Yeah, all that.
Yeah.
And we end up paying the price in the form of interest and fees. And he brings up this statistic. It's kind of shocking. The average American spends 34.5% of their after-tax income just on interest.
It's massive.
It's like having this huge headwind pushing against you, no matter how hard you try to move forward.
Right.
He compares it to an airplane trying to take off. You might have this powerful engine.
Yeah.
But if that headwind's strong enough, you're just not going anywhere. You're going backwards.
Or even going backwards.
Yeah, exactly. So Nash isn't just saying find higher returns on your investments.
He's
saying build a system where you control the money.
Yeah.
So you minimize that headwind.
Exactly.
Okay, so how do we do that? That's where the dividend-paying whole life insurance comes in. Now, I know you're thinking life insurance, isn't that, for...
when you die.
Yeah. But Nash argues that a whole life policy, if it's structured correctly, can function like your own personal bank.
Interesting.
I know.
How does that work?
Well, think about it.
Mm-hmm.
You're making those regular premium payments.
Like deposits. Yeah, just like deposits into a bank account. And those premiums are building up the cash value, just like a savings account that's earning interest.
Okay, so premiums are like deposits. The cash value is like our balance. What else?
And here's where it gets really interesting. You can actually borrow against that cash value.
Yeah.
Just like you take out a loan from the bank. But because you're essentially borrowing from yourself, that interest you pay on the loan, it goes back into your own system.
Wait, so instead of paying interest to a bank, I'm paying it back to myself.
You got it.
That seems like way too good to be true. What's the catch?
Well, there is a learning curve. And it's not like get rich quick or anything. You need discipline. You need to think long term. But Nash argues that if you do it right, this can be way more beneficial than traditional banking.
Okay, so what about the whole life insurance is a bad investment thing? I hear that all the time.
Yeah, well, Nash addresses that head on. He points out even regular banks take years to really get going, build a customer base and become profitable.
Right.
So there are these establishment costs. And with a life insurance policy, it's like you're starting a new business every time you get a new policy.
So those costs are kind of baked in from the start.
Yeah, exactly. And that's often overlooked. People see a CD, at a bank, and think, oh, that interest rate is higher. But over time, the life insurance policy can really outperform it because those initial costs are spread out.
There's a long game.
Absolutely.
Yeah.
And what it means is, by utilizing this type of policy, a dividend-paying whole life insurance policy, you can get the rewards that normally would go to the bank's stockholders.
Okay, so I'm cutting out the middleman.
Exactly.
And those profits come back to me.
You got it. Fueling your own growth.
All right, I'm starting to get this. So how does it work in the real world? Give me an example.
Okay, let's say you need to buy a car.
Okay.
Nash outlines 5 different methods, and he starts with the worst one, which is leasing.
Yeah, leasing always seems kind of like, ouch.
Right. And then he walks us through each method, getting progressively better until the best, which is using the dividend-paying whole life insurance policy.
Okay, but how do you buy a car with life insurance?
You don't literally buy it with the policy. You build up that cash value,
Right.
and then take out a loan against it to buy the car, and then you repay that loan to yourself.
With interest.
With interest, just like a regular bank loan, but to myself. To yourself.
So instead of the bank getting that interest, it goes back into my policy.
Yep, increasing your cash value even more.
So it's like having my cake and eating it too.
Pretty much. Now, the alternative people think of is maybe using a bank CD for this.
Okay, yeah.
And initially, those interest rates on a CD might look good.
Yeah.
But this is where the power of compounding really comes in. This is where controlling your own money really starts to pay off. And the life insurance policy can outperform the CD in a big way over time. Nash gives a great example in his book to really highlight this. He compares the results year by year. And by year 51, oh boy, the difference is dramatic.
Whoa, okay. So it's not just about the numbers.
Right.
It's about who's in control.
Exactly. It's about the power that comes from controlling your own money.
Okay, so that was car financing. What about other areas? How else does this banking concept apply?
Well, Nash doesn't just stop at cars, he takes it to business. He shows how you can apply the same principles to, like, equipment financing. He uses this example of a logger buying a logging truck.
Big purchase.
Yeah, big purchase. So instead of going to a traditional lender, the logger uses his life insurance policy
To get the loan.
to get the loan. But the key here is he's got to play the game right.
What does that mean?
It means he has to set the interest rate he pays himself to be the same as what a bank would charge him.
No more stealing from himself.
Right. It's tempting to give yourself a break on the interest,
Oh, yeah, for sure.
but that defeats the whole purpose. You're undermining the system you're trying to build.
Gotcha. So the logger is basically acting as his own bank, lending himself the money and then paying himself back. What's the point? What's the benefit?
Well, Nash shows it with these illustrations in his book. And the key takeaway is, by doing this, by playing the game correctly, the logger ends up with way more cash value in his policy over time compared to if he had just gone to a bank for the loan.
That is fascinating.
It's a whole different way of thinking about money.
It really is.
And it doesn't stop there. Nash shows you can use this for real estate. He even talks about self-insuring for things like damage to your car.
Self-insuring? How does that even work?
Well, it's not traditional insurance. You're not paying premiums to a company. You're using that cash value in your life insurance policy to cover any losses you might have. You become your own insurance company.
Whoa. Okay. And why would I want to do that?
It's about control and flexibility. You're cutting out the middleman, which is the insurance company. You're saving money in the long run, potentially. Yeah. And you're building your own reserves.
So it's about taking control.
Yes. It's about building a system that works for you, not the banks or insurance companies.
I like it. So we talk about a lot here. Where do we go from here?
Well, this is just the start.
Oh, boy.
Nash builds on all of this. He goes into creating a whole banking dynasty using multi-generational life insurance planning. He challenges conventional wisdom on college, even retirement.
Wow. This is way more than just a deep dive. It's like a whole new world.
Yeah.
I can't wait to see where this goes.
Me neither. And remember, this is about giving you the power to make good decisions.
Right.
To explore alternatives. Question the assumptions everyone else is making.
Yeah. Take control. Build a financial future that really aligns with your values and your goals.
Exactly. Now, before we get too far ahead of ourselves, let's take a closer look at how this banking system actually works within a life insurance policy.
Yeah, let's get into the nuts and bolts of it.
It can get a little confusing, so we're going to break it down step by step.
Sounds good to me.
All right, so let's break down how this personal banking system actually works within a whole life insurance policy.
Okay, sounds good.
It's about understanding the different characters involved.
Okay.
Almost like in a play.
Okay.
Nash starts by comparing a traditional bank to a dividend-paying whole life insurance policy from a mutual company.
Okay.
And he points out They both have their own cast of characters.
Okay.
They both need administrative staff, people to kind of run the show behind the scenes.
Right. Makes sense. The stagehands.
Exactly, the safe hands. And of course, both institutions lend money.
Right. That's their main thing.
That's their core function.
Mm-hmm.
But this is where things diverge. The characters start playing different roles.
Okay, I'm intrigued.
So in a bank, the stockholders, they're the ones earning the dividends. But with a life insurance policy, you, the policyholder, you earn those dividends.
Ah, okay. So it's like I'm taking on the role of the stockholder.
Exactly. And in a bank, the CD holder earns the interest. But with a life insurance policy, you're earning interest through the growth of the cash value and you're getting dividends.
Whoa, hold on. So I'm getting the benefits of being both the stockholder and the CD holder.
You got it. It's a powerful combination.
Okay, that is interesting. Now, you mentioned earlier that there's a difference in establishment costs between banks and these types of policies. Can you expand on that a little?
Absolutely. Think about it. A traditional bank, to get set up, takes time. They have to build up their customer base, get profitable.
Right.
There are a lot of costs up front. But a life insurance policy, it's kind of like starting a brand new business every time someone buys one.
So those costs are already built in?
Yeah, they're baked in. And that's often overlooked when people are comparing the two. So a CD might look better in those early years because of a higher interest rate maybe. But over time, as those establishment costs are spread out, the life insurance policy can really gain ground.
So it's the long game again.
It's always about the long game with this. What does this all mean? It means that, potentially, by using a dividend-paying whole life insurance policy, you can get the rewards that would have gone to the bank stockholders.
It's cutting out the middleman again.
Exactly.
Okay, so I'm directing those profits back to myself.
Yes, fueling your own growth.
This is starting to click. But before we go too far, I have to ask, does this really work? Is there any proof? It sounds almost too good to be true.
Well, Nash is very thorough in his book. He doesn't just throw these ideas out there. He backs them up with real-world examples, with illustrations. He wants you to see how the numbers play out over time.
Okay, so he's showing us the receipts.
He is. He shows you the receipts. For example, he uses a table to illustrate how that difference in establishment costs between the bank and the life insurance policy makes a difference over the long haul. So even though that CD might look better early on, after a few decades, the life insurance policy can really take off.
Because it's been compounding all that time.
Exactly. And you're the one reaping the benefits, not the bank.
I love it. This is making a lot of sense. It's about that long-term thinking again.
It is. Building a system that works for you, not against you. And this leads to another important point he makes, really understanding how interest works.
Interest. I think I have a pretty good handle on interest.
Oh, I'm sure you do. But he's saying it's not as simple as just getting the highest rate of return on your investments.
Okay, explain that.
So imagine this. Person A invests $100,000.
Okay.
And they get, let's say, a decent return of 8.4%. That's $8,400 they're making.
Not bad.
Now, person B, they take that same $100,000 and put it into a dividend-paying whole life insurance policy.
Okay.
Then they borrow against that policy to make that same investment. Let's say they're paying themselves 8% interest on that loan.
Okay, so they're using their policy as the source of funds rather than taking money out of their bank account.
Exactly. Now, here's the key. Person B is essentially earning interest in two ways.
Two ways. How so?
Well, they're making money from the investment itself, just like NA, but they're also earning interest from the loan they took out against their own policy.
Wait. They're earning interest on the interest they're paying themselves.
You got it. It seems counterintuitive, but that's how the system works.
That is wild. How does that even make sense?
It's all about understanding the flow of money, that interest they're paying. It's not just disappearing, it's going right back into their own system.
Increasing the cash value of their policy.
Exactly. So it's a double win. They're making money from the investment and building up their insurance policy at the same time.
That's amazing.
This is how the infinite banking concept can really take your wealth building to another level. And it's all about understanding that the interest you pay on a policy loan, it's not just a cost.
It's actually an investment.
It's fueling the growth of your own financial ecosystem.
I'm mind blown.
Yeah.
So I'm not just earning interest, I'm actually creating my own interest by strategically borrowing from and lending to myself. This is next level.
It is. And this leads to another concept Nash introduces, the idea that your life insurance policy can be viewed as a trust.
A trust. Okay, walk me through that.
So with a traditional trust, you have the grantor who puts property into the trust. You have the trustee who manages the property. And then you have the beneficiary who receives the benefits.
Right.
Yeah.
Yes, that makes sense.
Yeah.
But how does that apply to life insurance?
With a life insurance policy, you are the grantor, putting the premiums into the policy. The insurance company acts as the trustee, managing those funds and eventually paying out the death benefit to your beneficiary.
So I'm creating a trust for myself and my beneficiaries.
You can think of it that way. It highlights the responsibility the insurance company has to manage your money wisely. And it emphasizes that the interest you pay on a policy loan, it's not just going away.
Right. It's going back into my own policy.
Exactly. Ultimately benefiting you and your loved ones.
This is incredible. It's like I'm building this whole self-sustaining financial ecosystem.
That's a great way to put it. And all the benefits flow back to you and your family. Now, I know this can be a little abstract. Do you want to see a real-world example of how this plays out?
Please, yeah. I need to see this in action.
Nash tells this story about a logger.
Another logger.
Yeah, this guy was financing his logging truck through a regular finance company. He was paying $16,000 a month for this truck.
Ouch. That's a lot of money.
It's a lot of money. And then he has this aha moment. He realizes this finance company, they're borrowing money from life insurance companies, adding a fee, and then lending it right back to him.
So he's paying extra to essentially borrow his own money.
You got it. It's like going to a competitor's grocery store to buy groceries when you own a grocery store yourself. Doesn't make sense. So he goes to his life insurance agent and asks if he can finance the truck through his own policy.
And this is where the playing the game thing comes back in, right?
Exactly. He can borrow against the policy, but he has to treat himself like a real bank would. He has to set a realistic loan repayment rate.
No more stealing from himself.
Exactly. And you know what? Nash shows us, using illustrations, that even though the policy loan interest rate might be lower, by setting a higher repayment rate, the logger actually increases the cash value of his policy faster.
So he's paying himself back quicker, which makes his policy grow faster.
You got it. It's creating that positive feedback loop within his own system.
I love it.
And by age 65, that logger has significantly more cash value in his policy than he would have if he'd just gone with traditional financing.
This is a whole different way of thinking about money.
It is. It really is. And it doesn't end there. Nash talks about how the logger could add more policies to finance even more equipment.
So instead of going into debt, he's actually using his own banking system to grow his business.
Exactly. It's about creating a financial engine that works for him, not against him. And he even talks about the logger self-insuring for, like, damage to his trucks.
Now, we talked about self-insuring before, but how does that actually work practically?
Well, it's not about getting rid of your insurance completely. It's about realizing that once you have this substantial cash value in your life insurance policy, you essentially have your own funds to cover potential losses.
So I'm not paying premiums to an insurance company anymore. I'm using my own cash reserves to fix or replace things if they break.
Exactly. You're cutting out the middleman again, taking control, and potentially saving a lot of money. Plus, you don't have to deal with insurance claims and all that hassle.
Okay, that makes sense.
It all comes back to becoming your own banker. You control the flow of money. You get the benefits of the interest. You have the flexibility to deal with things as they come up.
I am on board with this. This is really empowering.
It is. And you know, it all comes down to that core concept of becoming your own banker. You're building that system
Right.
where you're in control of your finances.
It's not just about the life insurance. It's about creating this whole system that works for me.
Exactly.
This is blowing my mind.
Good. But, you know, some people might be thinking, what about when interest rates change? What happens if they go down?
Yeah, that's a good question. That seems like it would throw everything off.
Well, Nash talks about that. He says when interest rates go down, you just need to adjust what he calls your capitalization period, which is basically the time it takes for you to build up enough cash value in your policy to make the system work effectively.
So it's about being adaptable.
Exactly, adjusting your strategy. And he talks about the importance of having a good coach. You know, someone who understands all of this and can guide you.
So it's not just set it and forget it. You need to stay on top of it.
Exactly. And he also encourages people to join or create wealth clubs where you can connect with others who are doing the same thing, share knowledge, support each other.
I love that. Like a team of financial cheerleaders.
Exactly. Now, one thing that I found really fascinating was his critique of the whole traditional retirement planning model.
Yeah, he really goes against the grain on that, doesn't he?
Yeah.
It's like he's saying, forget everything you thought you knew about retirement.
Right. He argues that this whole concept of retirement, as we know it today, is actually a pretty recent invention. It wasn't something that people really focused on centuries ago.
So it's not like some deep-seated human need.
He's saying it's more of a social construct.
Interesting. So what's wrong with retirement?
Well, he says that people need purpose. They need meaning. And a lot of times when people retire from their jobs, they get bored.
Right, they lose their sense of purpose.
Exactly. They might lose their direction, their health can even decline. He doesn't believe in just clocking out at a certain age and calling it quits.
So it's not about stopping work completely. It's about finding ways to stay engaged, to be productive.
Yes. He uses these inspiring examples like John Templeton. He founded the Templeton Fund.
I've heard of him.
This guy retired at 80 and then became more productive.
Wow. What an inspiration.
Right. And he also talks about W. Edward Deming, who was a business consultant who was still working at 93. These guys weren't content to just sit back and relax. They had that drive to keep learning and growing.
So he's saying we need to redefine what aging means, to create lives that are meaningful and productive.
Exactly. And it doesn't have to fit into this traditional retirement box. It's about designing a life that aligns with your passions and your values and allows you to thrive at every stage.
I love that. So how does this tie back to the infinite banking concept? Where does the whole life insurance fit into all of this?
Well, Nash argues that a good life insurance policy can be a powerful tool for supporting this kind of life. It can give you that passive income in retirement so you can keep doing the things you love without worrying about money.
So it's about building that safety net so you can pursue your dreams.
Exactly. It gives you options, flexibility. You can work less, travel more, or just enjoy more free time. It's about living a life of abundance on your own terms.
This is incredible. It's about aligning our finances with our life goals, not letting our finances dictate our life. I'm seeing the bigger picture here.
That's great, but I know this is a lot to take in. Do you want to hear a story about how this actually worked for someone?
Yeah, I think that would help bring it all together.
Nash tells this story about a guy named Joe.
Okay.
Joe was really struggling financially, a lot of debt, feeling overwhelmed.
Yeah, man.
Right. But then he comes across Nash's book, discovers this infinite banking concept.
All right.
And he starts by getting a dividend-paying whole life insurance policy.
Okay.
Starts using it as his personal bank, financing things through policy loans, paying them back diligently like we talked about.
So he's controlling the flow of money, and all that interest is going back into his own system.
Exactly. And guess what? His situation starts to improve dramatically.
I bet.
He gets out of debt, builds a strong foundation, and eventually he even uses his policy to start his own business.
Wow. That's the dream right there.
It is. It's a real-life example of how this can work. It's never too late to take control of your finances. With the right tools, the right mindset, you can achieve that financial freedom, create that abundance.
Joe's story is really inspiring.
It is. It shows the potential. Now, I know some people are still going to be skeptical. They're going to think, this sounds great, but is it really possible for me?
Yeah, I can see that. What would you say to those people?
Well, Nash has included tons of resources in his book. There's a glossary of key terms, a whole list of books for further reading, even advice on finding a good financial professional who understands all of this.
Okay, so he's not just presenting a theory, he's giving you a real roadmap.
Exactly. He wants to give people the tools they need to take charge of their finances. But it's important to remember this is a journey. It's a process.
Right, it's not going to happen overnight.
You have to be willing to learn, to adapt, to keep refining your approach. But it's worth it.
One of the things that really stood out to me was his emphasis on passing this knowledge on to future generations.
Oh, absolutely. It's not just about building wealth for yourself. It's about creating a legacy of financial literacy, of empowerment.
Yeah, it's like breaking that cycle of financial dependence.
Exactly. He wants us to talk to our kids about money early on, teach them how to manage it wisely, involve them in our financial decisions.
Create that culture of responsibility.
Right. And he even suggests using this concept to build a banking dynasty, using multi-generational life insurance planning.
Okay, we haven't gotten into that yet. I want to hear more about that. Banking dynasty sounds pretty epic.
It is pretty cool. It all starts with a grandparent buying a dividend-paying whole life insurance policy for their grandchild right when they're born. And the grandparent keeps ownership of the policy until they pass away, and then it goes to the parent.
So it's like planting a seed that's going to grow over time.
Exactly. And because these policies are designed to really maximize that cash value growth, the potential returns are significant. He gives an example of a policy that has a $2,000 annual premium. By the time that grandson is 22, the cash value is projected to be over $100,000.
Wow, that's a lot of growth without even making any more contributions.
Right. And if it keeps growing at a similar rate, by the time he's 70, it could be over $4 million.
That's life-changing money. It really shows you the power of compound interest over time.
And remember, that's just the baseline scenario. If he's using the policy actively, financing things, paying himself back, those numbers could be even higher.
He's making the system work for him.
Exactly. And by age 70, he could start taking dividend withdrawals up to $225,000 a year.
Wow, that's a lot of passive income.
It is. And if he lives to 85, he would have gotten back all of his premium payments, plus over $3.5 million in income.
And he'd still have a death benefit for his heirs.
Over $6 million.
This is wild.
It's a win-win-win.
Financial security for him, passive income in retirement, and a huge legacy for his family.
It's a beautiful thing. It's really a vision for multi-generational wealth, creating that stability, that empowerment that can benefit families for decades.
This is so powerful. I'm really seeing the potential of this. What are your initial thoughts?
You know, I'm really intrigued by this idea of using life insurance this way. It's not how we typically think of it, but it makes a lot of sense when you look at the long-term benefits.
It definitely challenges the conventional wisdom around life insurance.
And it highlights something else too, which is the importance of teaching our kids about finances, giving them the knowledge to create their own financial security.
Absolutely. It's about empowering them to be financially savvy.
Right. And Nash even shows this in his book with a table. It illustrates how a whole life insurance policy can grow over 100 years.
Wow, that's a long time.
It is. But even with a small premium, that cash value just keeps growing exponentially.
That's amazing. It's like a financial time lapse, seeing those initial investments turn into this huge amount of wealth.
Exactly. And if the policyholder is actively using the policy, those returns could be even more.
It's a powerful argument for dividend-paying whole life insurance. And it's a good reminder. Financial freedom takes time. It's not a sprint. It's a marathon.
Absolutely. It takes patience, discipline, and a willingness to think differently than everyone else.
But it's worth it. For that freedom, that security. For you, for your loved ones, for generations.
Now let's switch gears a little bit and talk about Nash's perspective on the monetary value of a college degree.
Oh yeah, he doesn't shy away from this one either, does he? He really questions whether a college degree is the key to success, like everyone says it is.
He really does. He starts by referencing a commentary by this guy, Dr. Herbert Rotfeld.
Okay.
He talks about higher education in America, and he basically says a lot of students are more focused on getting the degree just as a way to get a job than they are on actually learning.
It's like checking a box, rather than really expanding their minds.
Exactly. And he criticizes how universities are becoming more like businesses, focused on training people for very specific jobs, rather than teaching them how to think critically, be creative, that kind of thing.
Right, like the true spirit of education is being lost.
Yeah, that's his concern. And Nash agrees with him. He says the value of a college degree is often blown way out of proportion, especially when you consider how much tuition costs these days.
So he's saying, is it really worth it, financially speaking?
Exactly. He wants us to look at the costs, the benefits, and think about whether there might be other ways to achieve our goals without going into all that student loan debt.
So he's not saying college is bad.
No.
But he's saying, think critically. Look at your options.
Exactly. And he challenges us to think outside the box. What if, instead of spending all that money on college, you put it into a dividend-paying whole life insurance policy?
So using that money to build my own banking system instead.
Exactly. And then you can use those funds to do other things. Apprenticeships, online courses, travel, even start your own business.
Okay, so it's about taking control of my education, creating my own path.
Yes. It's about understanding that financial independence gives you the freedom to choose how you learn and grow. You don't have to be stuck in that traditional system.
I love that.
He talks about successful entrepreneurs, business leaders who didn't even go to college. They made their own way, they worked hard, they learned on the job, and they found success.
That's a really important message, especially for young people today.
It is. It's about following your passions, not just doing what everyone expects you to do.
Right. And it all comes back to that core concept of becoming your own banker.
Exactly.
It's about building that strong financial foundation so you can pursue your dreams, whatever they are.
Now, he takes this even further and talks about doctors.
Okay.
It's a long and expensive road to become a doctor. First, you have medical school, and then you have those high malpractice insurance costs.
It's a double whammy.
Exactly. And he says this dividend-paying whole life insurance policy, it can help with that.
Really? How so?
Well, let's say a young woman is thinking about going to medical school. Instead of taking out student loans, she could get one of these policies.
Okay.
Use the cash value to pay for her education, maybe even some of her living expenses while she's in school.
That would be huge. It would take so much stress off.
Right. She could focus on her studies, not on debt. And then once she starts practicing, she could use the policy to pay for her malpractice insurance premiums.
So it's a financial safety net throughout her whole career.
It is. It gives her that security. And it's leveraging the power of compound interest and tax-deferred growth to build that foundation for her future.
Nash is giving us so much to think about. He's really making us rethink everything. Education, careers, financial planning, it's all connected.
He's showing us there are other ways to achieve success.
Yeah, ways that might lead to more freedom, more fulfillment, more financial security. This is incredible.
Absolutely. And it all comes down to understanding that money, when used properly, can be a tool for good. It can help you create a better life.
I love that. So let's talk about the traditional financial planning model.
Oh boy.
He's got some strong opinions on that too, right?
He does. He's especially critical of relying on government programs and those tax-sheltered retirement plans.
Yeah, I can see why he wouldn't be a fan of those. He seems to be all about self-reliance.
He is. And he says those programs can give people a false sense of security.
Okay, so it's like a trap.
It can be. They might sound good in theory, but in practice, they often don't deliver what they promise.
Right, because the government can change the rules at any time.
Exactly. He uses the example of doctors who put money into pension plans. They think it's going to be there for them when they retire. But what happens if the government changes the rules?
They're out of luck.
Yeah.
So it's not as secure as it seems.
Not at all. And then there's Social Security. It's supposed to be this safety net for everyone, but it's facing some serious problems.
I've heard that.
It might not be around for future generations.
That's scary.
It is. So he's saying relying on these government programs, it's like building your house on sand.
It could all come crumbling down.
Exactly. And he believes the real path to financial freedom is taking control, building a system that's independent of the government.
So not relying on anyone else to take care of you.
Exactly. And that's where dividend-paying whole life insurance comes in again.
Okay, so it's a private contract.
It's a private contract.
Okay.
Between you and the insurance company, the government has no say in it.
I like that. It's about being self-reliant, taking responsibility.
And this goes hand in hand with his focus on financial literacy. He says most people just don't understand how money works. And that leads to bad decisions.
Right. It's like they're playing a game they don't know the rules to.
Exactly. He wants us to see money not as something to just spend, but as a tool to build wealth, to create a better future.
It's about being smart with your money.
And using it ethically, making sure your financial decisions are aligned with your values.
Okay, so what's this about banking and the logging industry? I'm intrigued. How are those two things connected?
Well, he says they're both about managing a valuable resource for long-term growth. In banking, it's money. In logging, it's timber.
Okay.
And he says a well-managed forest is one where you have trees of all different ages.
Right, so you have a steady supply of timber.
Exactly.
Yeah.
Sustainable. And a well-managed banking system, it's similar. You want a diverse mix of assets that are constantly generating cash flow and growth.
So it's not about quick profits.
No, it's about playing the long game, creating sustainable value that can benefit you for years to come.
So let's say we have a logger who wants to build strong financial foundation for his business. How would he use this concept?
Well, he could start by getting a dividend-paying whole life insurance policy.
Okay.
And he could use it to finance his equipment, like we talked about earlier.
Right.
But he could also use it to build up a cash reserve for unexpected things or for opportunities that come up.
So it's like a rainy day fund, but for his business.
It's a financial cushion. It gives him flexibility. And as his business grows, he can add more policies, just like adding more trees to his forest.
Okay, I'm liking this analogy.
It's about diversifying, building up that portfolio of assets, and then when he's ready to retire, he can use those policies to generate income, just like harvesting timber from his mature trees.
It's a perfect analogy. It really captures the essence of this. building a personal banking system.
It does, and it highlights that long-term thinking, that wise management.
So it's not just about being wealthy.
No.
It's about having a vision, knowing what you want to achieve with your money.
Exactly. Do you want to travel the world, start a business, leave a legacy for your children? You need to figure out what you want and then build a financial system that supports that vision.
Okay, so back to our traveling couple.
Right. They could use their dividend-paying whole life insurance policy to create their travel fund, borrow against it to finance trips, pay themselves back, and watch that cash value grow.
It's like having a self-funding travel account.
And they could even use the policy to generate income while they're traveling. Maybe invest in rental properties, online businesses, something like that.
So it's about creating a system that supports their lifestyle, allows them to live their dreams.
Exactly. It's about aligning your financial strategies with your life goals, not letting your finances hold you back.
It's like they're creating this incredible life full of adventure, but they're also building a secure future for themselves at the same time. It's really amazing.
It is. It really shows you that you can have both. You can live a life that's exciting and meaningful, and you can be financially responsible at the same time.
And I think that's one of the biggest takeaways from Nash's book.
Definitely.
It's not about choosing between living your dreams and being financially secure.
Right. It's about creating a system that supports both.
Exactly. And I love how he lays out a clear path for how to do that.
Oh, yeah.
It's not just some vague idea. It's a step-by-step roadmap. He tells you exactly what to do, what to look for, what to avoid.
He really does. He gives you the tools you need to become your own banker.
And to create that financial freedom that everyone wants. But, I want to go back to something we touched on earlier about traditional financial planning.
Sure.
Natch is pretty critical of those government-sponsored programs and those tax-sheltered retirement plans.
Yeah, he doesn't sugarcoat it. He sees those programs as creating this illusion of security.
Ah, okay. So they're not as safe as they seem.
Not necessarily. They might sound good on paper, but in reality, they often don't live up to the hype.
Right, because the government can change the rules at any time. They can decide to cut benefits or raise taxes or who knows what. And then what are you going to do?
Exactly. It's like building your house on sand. It might look stable for a while, but it could all come crashing down at any moment.
He uses that example of the doctors who put their money in pension plans. They think it's going to be there for them when they retire. But what happens if the government decides to change the rules?
Right. Suddenly, their retirement isn't so secure anymore, and then there's Social Security. It's supposed to be this safety net for everyone, but it's facing all sorts of problems.
Yeah, I've heard that it's not in great shape financially.
It's not. And Nash argues that relying on these government programs is like putting all your eggs in one basket, a very risky basket.
Like giving up control of your financial future.
Exactly. And he believes that the real path to freedom, the real path to security, is taking control. Building your own system, a system that's independent of the government, a system that you can rely on.
And that's where dividend-paying whole life insurance comes in again.
It's a private contract between you and the insurance company. The government has no say in it.
I like that.
Yeah.
It's about being self-reliant, taking responsibility for your own future.
Absolutely. And it goes hand in hand with this idea of financial literacy. Most people just don't understand money. They don't understand how it works.
Yeah. And that lack of knowledge can be really dangerous.
It is. It leads to bad decisions, to debt, to financial stress.
So it's not just about having money.
No, it's about understanding money, knowing how to use it to create a better life for yourself and your family.
And I think that's a really important message, especially in today's world.
It is. We're bombarded with all these messages about spending money, about getting into debt. But Nash is saying, wait a minute, there's a better way.
It's about taking control, making your money work for you.
And that brings us back to that analogy with the logging industry. Do you remember that?
Oh, yeah, the trees.
Exactly. It's all about managing a valuable resource for long-term growth. In banking, it's money. In logging, it's timber.
So instead of just chopping down all the trees for a quick profit,
yeah,
a wise logger is going to cultivate that forest.
Right. He's going to plant new trees. He's going to thin out the weaker ones. He's going to make sure that there's a sustainable yield of timber for years to come.
It's about thinking long-term, about creating something that will benefit future generations.
Exactly. And that's how we need to think about our money, too. We need to build a financial system that's sustainable, a system that will support us and our families for decades to come.
So going back to our logger, instead of going into debt to buy his equipment, he could get a dividend-paying whole life insurance policy and use that as his personal bank.
Right. He could borrow against the policy to finance his equipment, pay himself back with interest, and build up the cash value of his policy all at the same time.
It's like a win-win-win situation.
It is. He gets the equipment he needs, he builds his financial foundation, and he's in control the whole time. And then he can use that policy to build up a cash reserve for unexpected expenses or to take advantage of opportunities that come along. It's like having that financial cushion that gives him peace of mind.
It's like he's creating his own safety net.
Exactly. And as his business grows, he can add more policies. Just like adding more trees to his forest, he's diversifying his portfolio, creating a system that will support him for years to come. And then when he's ready to retire, he can use those policies to generate income. It's like harvesting the timber from those mature trees. He's created a sustainable source of income that will benefit him and his family for generations.
I love this analogy. It really makes it clear how powerful this concept is.
It does, and it shows how we can apply these principles not just to our personal finances, but to our businesses as well.
It's about taking control, becoming the architect of your own financial destiny.
Exactly, and it all starts with having a vision, knowing what you want your financial future to look like. Do you want to travel the world? Start your own business, leave a legacy for your children, figure out what you want, and then start building a financial system that will support those dreams.
I think that's a great place to wrap up our deep dive. This has been such an eye-opening conversation.
It really has. Nash gives us so much to think about. He challenges us to question the status quo, to think outside the box, to take control of our financial lives.
And to build a future that's aligned with our values, our goals, and our dreams.
Absolutely. So to everyone listening, we hope this deep dive has inspired you to explore these ideas further and to consider the possibilities of becoming your own banker. Remember, the journey to financial freedom starts with a single step. Take that step today.
Thanks for joining us.